Hello and welcome back to another video. Today's video, I'm just going to be recapping this trade that I managed to take advantage of today as a result of market participants' chosen trading decisions. I'm also going to be sharing with you how this was an extremely high bit of price action to actually take advantage of in a predictable manner. Okay, so first things first, let's actually start off on our monthly time frame on EURUSD. So what we have to take into consideration is the framework that has actually presented itself previously and currently in live times. Okay, so firstly, previously, okay, how have market participants chosen to trade price, and what are some of the most significant areas of liquidity and prices being traded at? What will actually have an effect and could help us actually get more of an edge over the markets to where we could actually construct a bias within the first place. Okay, so helping us, helping our discretional decision making. Okay, so first things first, you can see that market participants have chosen to push price down into this monthly fair value gap here. Now, from this point here, anywhere below this purple line in the monthly fair value gap, we were actually anticipating some sort of reversal from the leg down to actually take place. Okay, so this is our reversal point. And yes, okay, this has played out. Now, what is the objective of a reversal? The objective of the reversal will be to restore and balance equilibrium within the market, either choosing to trade prices up to back into our premium array of this leg to the downside, or to take a substantial high. Okay, in this case, this high here, this purple high, highlighted, which happens to be previous yearly high. Okay, now when you can actually understand, okay, once this profile of this reversal has actually been completed, okay, and it's reached its objective, where more likely than not, okay, you can confirm this profile is now complete, then you've got to actually understand, okay, what is most likely going to happen next on the higher time frame. So in this scenario, what's most likely going to happen next, post this, expansion to the upside, acting as our push from the reversal, is going to be some sort of retracement back into the leg. Okay, so mirroring what's happening back into this previous downwards leg, we're going to see some sort of either retracement back into the discount of this up leg, or we're going to see a run for some of our significant lows. So dropping down the time frame a little bit, on the weekly. So if we're going to be anticipating some sort of retracement on a weekly level, okay, going into the trading week, okay, where is the most probabilistic direction that the weekly candle is actually going to head in? Okay, now the way you actually do this is by locating, okay, where the most probabilistic, predictable, high probable drawn liquidity is actually going to be. Okay, and every week, more likely than not, is going to have one. And in this week, it's going to be this weekly fair value gap, okay, highlighted in orange. So, taking a look at the daily as well, you can see, before we actually managed to get into this trade, the way our previous week's candle actually engineered this sell side liquidity just above this weekly fair value gap, okay, so adding to the confluence and narrative that more likely than not, okay, price is going to retrace back into the leg. So dropping onto the 4 hour to the execution, okay, I'll show you what I waited for to actually get in line with this trade. Okay, so you can see in our previous week we had this range of consolidation. We actually managed to just take this high here, as you can see, so take this buy side liquidity, okay. It doesn't matter if we, even thrash past it, then show signs of intent to push low, or we just tap it like this. No matter what, if it just takes the high, then looks to push prices lower, then this is where we can look to get in line in a trade when the timing is right. Okay, so getting into the timing a little bit more, what do we have, post this buy side liquidity sweep? Okay, so we've got this range of consolidation here, and then we get the displacement in line with the direction on where we're actually anticipating the weekly candle to expand in the first place. So this is where, okay, once we've actually got this displacement, we'll look to actually align some sort of weekly manipulation to where we can actually, say, okay, the weekly manipulation's been put in, could this potentially be high or low of the week? So this is a good example. We've got the displacement. This push here, okay, highlighted in red, is our FOMC statement, okay, in late Wednesday, coming out at 7 p.m. Okay. Now, as soon as we have this statement, what was the point of it? Okay. Now you can see clearly the point of it was to push and trade within this 4-hour fair value gap, and then from here, it's quite easily and shown that market participants' intent was to push price lower again. Okay, so we've had this displacement again. We've had the manipulation. We can say more likely than not, okay, high of the week is going to be in at this point in current lifetimes. And then, okay, we're going to be picking up upon the parameters that we can actually use to get an execution, okay? So we've pushed price lower. We've disrespected our parameters here. This breaker blocks has presented itself very nicely. And, okay, ask yourself, can I just take an entry on this, okay? So we've got a strong drawn liquidity. We've shown that we've got our clear weekly manipulation. We've displaced it, disrespected. Time is aligning with price. You can pull your fib pull. You can see, yes, okay, our parameters are in our premium range, so more likely than not, market participants are going to push price towards the parameters and actually tap us in the trade within the first place. So focusing on the execution a little bit more, yes, we get tapped in here. This is our invalidation point as it acts as manipulation, high of the day, high, etc. And then we're just looking to target lower prices, aligned very nicely with the dollar index, okay? So with the dollar index, very, very similar, okay? How have we chosen to trade prices? Okay, so we've chosen to trade prices lower. Then from here, we're at our reversal point, the low. We've pushed prices higher, displaced this new weekly opening gap here. And this is literally simply acting as an area of support for market participants. Okay, so this is going to be a place where more likely than not, market participants are going to choose to trade prices higher if it's got narrative. Okay, if you can, if your read on price is good, if you're being patient, etc. Now, from this point onwards, all we're actually waiting for is that clear manipulation again. Okay, so very, very similar. We've got this clear range of consolidation just above, some of our parameters that act as, magnets for price, such as our gap here, our daily fair value gap a little bit above, where, we're going to be anticipating the weekly candle to actually expand to. And then we've got this manipulation to the downside here, where we can say more likely than not, low of the week for the dollar index is going to be in when, we get this confirmation that market participants are shown intent to put prices higher from the parameters that are actually left behind from this manipulation. And when we get this, okay, that's simply where we're just market executing either Euro, USD or GU, depending on which is the most favorable pair. So thank you very much for listening, and I hope this video was somewhat helpful.